Well, today's video is going to be a fun one. We are talking about 5 stocks that I believe have the potential to go up 1,000+% over the next decade, guys. These stocks could make massive moves over the next 10 years, and you might not think that's a very realistic thing that stocks can go up that much over, a decade's time, when really, in fact, I've seen so many stocks just since I've been in the stock market go up 1,000+%. Listen to these big companies here that have gone up over 1,000% just since I've been in the stock market the last 10 years. Amazon, Tesla, Netflix, Facebook, Nvidia. There are a whole host of companies I could tell you about that are much smaller and much less talked about than these companies that have gone up well over 1,000%. These are just the big dog companies that have gone up over 1,000% just since I've been in the stock market, which is about a decade, okay? So I'm gonna give you 5 stocks that I think have, the potential to do it. Now, keyword is P, potential, okay? It doesn't mean these are automatics. You need 3 ingredients if you're gonna get a stock to go up 1,000+%. The first is you need a management team that has a vision for that company and knows how to execute on it. That's a hard thing for a lot of CEOs and management teams to pull off. A lot of them will have visions, but they don't know how to execute on that vision, okay? I've seen it with a lot of companies, unfortunately, and a lot of companies have great management teams, but they have no vision at all, unfortunately, okay? So you need a management team that has both of those. Then you need a decent economy. You don't need the economy to be great to have a stock go up 1,000+%. You just need a decent economy. And lastly, you need a company that can get out there to fund managers and tell the story of the company and why fund managers can invest and fund managers will actually believe in that company. You get those 3 ingredients, okay? You could have a stock that moves up over 1,000%. So I'm going to give you these 5 stocks. Let me know which one of these you guys think is the most realistic. 2 of these companies I do not own. 3 of the companies I do own. And so I hope you guys enjoy this. By the way, the first link down there in the description, if you've been investing in the stock market for less than a year, there's a 51 video course down there that I think should help you tremendously on everything I look for in stocks and whatnot. Enter code 200OFF at checkout to receive $200 off that course. It's a phenomenal deal for a limited time. All right, guys, the first stock up here is a company named Switch, okay? This is a data center company. I found out about this company a few months ago, and these first 2 stocks, by the way, I have no investments in them currently. The other 3 stocks I do have investments in, but Switch is one of these companies. I was driving by one of their facilities out here in Las Vegas, and there was a brand new facility that was being built. There's this company named Switch, and I was looking at this thing, and it was massive, massive, okay? These data centers they build are absolutely massive places, all right? And I'm looking at this place, and I'm like, holy smokes, is this like a new Federal Reserve building going in or something? This was like the most protected building. Like the wall is like taller than the Great Wall of China. They got ridiculous things on top of the wall. Like if you try to jump that thing, man, good luck. They got cameras everywhere. I'm like, this place is ridiculous. It's like Fort Knox. This place is crazy. So what they are is they're a data center company, all right? And so companies need to move, or it's more cost effective for companies to move a lot of their data center equipment and whatnot to one of their facilities, which are these massive, massive places. Now, real quick here, a lot of stuff is moving onto the cloud, okay? They estimate around 60% of the market's moving onto the cloud, so Amazon Web Services, Google Cloud, Microsoft Cloud, a lot of those different types of products, all right? But there are a ton of companies, and basically every company needs to have a certain amount that's not in the cloud, okay? So even a company like Amazon Web Services is actually one of Switch's customers because even Amazon Web Services likes, a certain portion of their information and whatnot not in the cloud. It's just kind of the way it is, all right? So they have a phenomenal opportunity. They have some facilities out here in Vegas. They got another massive one that's over a million square feet up in Reno. Grand Rapids, they just opened one. Atlanta, they're about to open one. They also have land in Miami, New York, some phenomenal markets. And like I said, these places are huge. We're talking like over 1 million square feet of just data center space. And it's much more cost efficient for most companies out there. And not only that, but these places are so secured that you've got to have a very secured place, okay? They have no water in any of the facilities, which is pretty rare. So the chance that there would be some type of water damage to any of the servers or anything like that is a very low probability. They put double roofs on these buildings, okay? So if somehow the first roof got compromised, which I don't know how that would happen, but if somehow the first roof got compromised, there's a whole other roof below that roof, guys. They take this stuff super serious. Like, it is insane. They have patents on a ton of their technology for the way they distribute hot air out of the facility and bring in cold air and whatnot. They got a totally cool model compared to the way most companies do it, all right, in the data center game. The thing that's very interesting interesting to me about this company is their churn rate, meaning the companies that actually leave this company, is super low. It's under 1%, okay? In the last few quarters, it's been about 0.1%, okay? So generally speaking, if a company starts using Switch for their data center needs, generally speaking, like they're gonna continue to use Switch, over and over again, year after year. It's recurring revenue, and they're probably not gonna leave the company. That's a very, very good sign there, all right? This is a company that's proven they can grow and grow and grow. This is all organic growth. They haven't done any acquisitions or anything like that. They were doing $207 million in revenue back a few years ago. Now they're doing $378, as much as this past year. EBITDA is growing very nicely, $112 million in EBITDA back in 14. This past year, they do nearly $200 million in EBITDA, so very, very nice. Look at the recurring revenue. Almost, 97.5% of the revenue coming in the door is recurring revenue, which I love recurring revenue business models. It's one thing if you sell a product or sell a service, and it's a one-off deal, right? But when you can have recurring revenue, that is like the holy grail there, guys. These are some financial target models they have here. So basically 47% gross profit as a percent of revenue. Net income, they have around a 20% range there that they'd like to hit as a percent of revenue, which is very nice, very profitable business. Once it gets built out, basically the facilities they build are very expensive, okay? We're talking some of these facilities are all in the hundreds of millions, if not the billions of dollars, okay? So that initial investment is massive, but after that, this business becomes a very, very profitable business with the money just keeps coming in. So this company went public back in October, and so far it's had a rough IPO, which, a lot of companies go through in that 6 to 9 month span. After they go IPO, they just have a rough span. They're in that whole situation right now, and it's a company that's going to be reporting earnings next week, so it's going to be very interesting to see what type of numbers they end up doing, if they're really great numbers or really bad numbers or whatnot. Be very interesting. So right now it's a company with a $3 billion market cap, so if they want to go 10x over the next decade, they basically need to make this into a $30 billion company. It's definitely a possibility as long as they can keep getting companies and keep building with companies. See, the great thing is once they get a customer, generally they keep that customer. Also, generally that customer grows with them, okay? So as they need more and more space, they go to Switch for more and more space. So a phenomenal business model, a very innovative company. The way they actually do their structures is so much different than most data center companies. The need for their type of business model is probably not going away anytime soon. If anything, it's increasing, which is a phenomenal thing. Is a company growing across the United States. They haven't done anything internationally. Think about when they go international. They got a lot of things going with that company. So it is definitely a possibility that this one could be a 10-bagger over the next decade. It depends on how well management, it keeps things going there. They've done a phenomenal job so far, though. Let's get into stock number 2. Stock number 2 is Dropbox. Dropbox, which is a cloud provider. A lot of people use this. Also, a lot of small businesses use this. I used to use it for my photography and videography company for real estate. I'm still a Dropbox customer. Actually, I never got rid of my subscription, which I think is like $99 a month. I'm like, it's a terabyte of data. I'll just keep it. But anyway, so Dropbox here, it's a $12 billion company, all right? So they're going to have to grow to be a $120 billion company if they want to 10x this business over the next decade. This is another company that just IPO'd recently. So back in March is around when they IPO'd. And the stock has not done much so far. But this was just a cloud storage company when they first came out in 2007. And now they're more of a team collaboration type company. So whether you're a small business or mid-sized business, you can really use them. Even if you're a large business, Dropbox, is a service you could use. I think right now it's still centered much more around small businesses like I had, or maybe even mid-sized businesses with, let's say, 50 to maybe a few hundred employees. But they're definitely trying to grow into that space where, enterprises using them, big companies with thousands of employees, tens of thousands of employees, and that's a real big opportunity for them. But that's just one opportunity. So right now, this company has around 500 million registered users, all right? 500 million registered users. They only have 11.5 million paying users, okay? I'm one of those 11.5 million. I'm a paying user. I have their lowest, thing they have, $99 a month, and you get 1 terabyte. But that's a huge opportunity. When you look at 500 million registered users, but only 11 million are paying right now, that's just a big opportunity for the company, all right? 80% of subscribers use the service for work, as I used to, all right? So look at this here, all right? They estimate around 300 million of the people that use Dropbox are people that could, probably end up signing up for a paid service at some point in time, as long as they can convert and they do the upsell on that, all right? That's a huge potential out there, guys. Even if they don't get 300 million, what if they get 111 million people, okay? That's still a massive, massive opportunity for this company to grow in the future. They just got to focus more on the upsell, becoming better salespeople. When you got 500 million people using it right now and only 11.5 million are actually paying, that's a huge opportunity for the company out there. That's the bottom line there, guys. Without even growing, a bunch of new users and whatnot. There's a company that is growing nicely. They did around 600 million in revenue back in 2015. This past year, 2017, they do $1.1 billion. Look at the way operating income has improved, okay? From a company losing $240 million back in 15 to now they actually made a $60 million profit there on operating income this past year. That's a big, big improvement. If we look at Q1 of 2017 versus Q1 of 2018, nice growth there from 248 million to 316 million. And then if we look at operating income, it's increased much, much more, okay? From about 5 million in 1Q 2017 to now 35 million in 1Q 2018. So that's kind of one of the beautiful things about this business model is not only do they have a huge opportunity to get a ton more customers through the door to actually pay, but then on top of that, you look at this company and it's beginning to, be a company that has way more operating income as the revenue, continues to increase. So it's a very exciting thing. They have a lot of different subscription plans. The first one is like a basic, it's a free thing to get people through the door, but the plus is something like I have, $99. Then they have a professional, they have a standard, they have advanced, and then they have the enterprise product, which is, they'll negotiate the prices out, and that's just the full gamut of cloud products and whatnot there. So when I look at Dropbox, I see this as a company that definitely has the potential, realistic potential, to be a 10-bagger over the next decade. The question is, can management do a good enough job upselling customers, understanding why they should go for, a product that's much better than what they have now, okay? That's the bottom line. Like they need to upsell not only people like myself that are in the most basic plan, $99 a month, they need to upsell us to something more expensive, but then they need to upsell all these people that are still using just a free service. If they can do that, this is a company that has massive, massive potential behind them. The question is, can they do that? If they can, it's a big thing. Stock number 3, now we're getting the stocks I actually own. There's only 3 stocks I think even have a close, possibility of going up 1,000%. One of them is Cirrus Logic. So it's a company with about a $2.5 billion market cap. So this would have to grow to be about a $25 billion market cap over the next 10 years. And they're really the only company in the world that is fully focused around everything in the audio signal chain, okay? Whether we're talking smartphones or the smart home, automotive, all these different, you got to think about the way the world we're going into where we're almost going to expect everything, for us to be able to talk to and whatnot. This is a huge opportunity for Cirrus Logic, and they're really the only company in the entire world that's dedicated just to the audio experience, audio codecs, amplifiers, microphones, the whole gamut of products. This is their focus. Okay, so when we're moving into more of a voice world where we expect to be able to talk to pretty much everything out there, whether it be a remote control for the television or the Apple TV, or whether it be our smartphones, whether it be our iPads, anything across the board, whether it be our homes, our thermostats, we just expect to be able to talk to everything in the future and it will do something for us. That's a really big opportunity for this company, all right? Massive opportunity going forward in the future. So this is a company right now, they have the whole gamut of products, smart codecs, voice processors, audio amplifiers, haptic drivers, which we'll get into, MEMS microphones, just the whole gamut, okay? So everything from when the device needs to hear your voice, which it goes through a microphone, to then it goes through the codecs, voice biometrics, audio DSP, audio amplifiers, haptic drivers, the whole deal. It's going through all that. But voice biometrics is a massive thing for the company, okay? Think about voice biometrics in this way, all right? Right now, if you say, hey, Apple, well, I won't say the hey Siri thing because my iPad will come on, but if you say, hey, Apple, and your device lights up, or, hey, Google Home, or whatever, there are certain things you can do with that right now, all right? But it's still somewhat of a gimmick. You can tell it to play music, you can ask for the score of the football game or whatever, but it's somewhat of a gimmick. Until you can start doing real things with that, Like you can tell it, you know, to order something for you from Amazon, or you can tell it, you know, you can ask it, hey, read my latest email, or hey, read the text message from Cheryl or something like that. Until you can do those type of things, it's kind of a gimmick. And right now with all devices across the board, you cannot do those type of things unless you already have the device unlocked, okay? So if you already have the device unlocked, then it can do those type of things, or some devices can. But at the same time, that's such a waste, okay? You're cutting something in the kitchen, or you're not by your phone or something, but you want it to do it, or you're driving your car and you want it, you know, your device to be able to tell you something that, you know, an email just came through, or you saw a text message pop up and you don't want to look at it, you want it to be read. If it's not your voice, if it can't authenticate your voice, it's worthless, okay? Because here's the problem. If we just allowed all our devices, basically all you need to steal is, you know, some bank CEO's, you know, device, and you could have the device read all the emails for you. That would be very bad. But if it can authenticate your voice and it knows that's your specific voice talking, then we're talking about a very meaningful product. So that is what voice biometrics is. It's something that authenticates your voice and can read all your emails and stuff and whatnot across the board, your text messages, do anything you really wanted to do, order food for you, you know, send your car. I mean, think about self-driving cars as those come more and more online. You know, think about, you know, just telling your iPhone, hey, you know, have my car pull up in the front, and it does it for you. Like, that would be a really bad thing if somebody just stole your phone and could do all those things. But if it can authenticate, now we're talking about a very meaningful product. So this is so big for the company. I have trouble explaining it, like how big of an opportunity this is for a company, because it takes voice things from being somewhat of a gimmick and, you know, yeah, we'll use it every now and then, to all of a sudden becoming a massive thing. But it has to know it's your voice specifically to unlock your device. That's where voice biometrics come in, all right? Massive, massive opportunity for the company. This company has grown phenomenally over the years. So sometimes, you know, they'll have a little dip off. So 2011 or 2012, they didn't grow that much, all right? Then all of a sudden 2012 to 2013, they grow massively. Then 2013 and 2014, revenue goes down a bit and everybody's like, oh my gosh, it's the end for Cirrus Logic. Then all of a sudden they get back to growth. 2017 and 2018, the company hasn't grown and they're kind of just in this spot right now where they're not really growing, but starting next year, the growth should take back off, okay? That's just kind of how this company is. It's a home run type company. Things will look lame for a little while, a year or two, and then all of a sudden, boom, the company takes off again. That's kind of where the company's at right now. Despite this, the company, you know, spends a ton of money on R&D. And why are they spending all this money on R&D? Well, their CEO is phenomenal, so you can't just say they're just wasting money or something like that. They're spending all this money because opportunities in all these voice segments it's just a massive opportunity. You think about the Amazon Alexas, how many people are starting to get those, the Echoes, Google Home, Apple HomePod, obviously, you know, every single tablet out there, every single phone manufacturer and whatnot. These are all just massive, massive opportunities. So the company needs to spend as much as possible on R&D so they can get these customers to be their customers for a long time to come. And generally, when a lot of these companies, you know, start using Cirrus Logic, generally speaking, they don't really leave them very often, all right? In Q1 fiscal 2019, Apple did represent around 76% of their revenue. So that should be a risk factor in there with Cirrus Logic. Does this company have massive potential with everything going, you know, more voice and audio related? Yes, massive potential for this company over the next decade. But at the same time, you got to understand the risk factor that Apple is by far and away their biggest customer. And it's likely that will not change anytime soon. Why? Because Apple kicks everybody's ass, okay? If there were all these great other smartphone manufacturers that were doing big numbers and were using high-end products, like Cirrus Logic's revenue would look much more diversified. But because Apple just like destroys everybody in the high-end space, like all Cirrus Logic's revenue is going to continue to come from there. So it's a risk factor that's got to be understood, and it's just the way it goes. So if you can't sleep at night knowing that, you know, they get a ton of revenue from Apple, then you probably shouldn't own this stock, okay? So that's why Cirrus Logic, I can never make it into a massive, massive position. It's definitely a good-sized position for me, but I could never make it into a massive position just for the mere fact that if Apple and their relationship ever got hurt, obviously the stock would be hurt. But huge, huge potential for that company over time. Next one up here is Tesla. Tesla has a chance to be a 10-bagger over the next decade here. So right now, Tesla has a market cap of around $59 billion. So basically, this company would need to go to around a $600 billion company over the next 10 years to go ahead and reach that 10 times number there. So basically, I want to take you through some numbers here. We're going to go through some numbers on what I think Tesla can do over time and, the kind of opportunity for them. So basically, in 5 years, in 5 years, I see the company as having doing around $100 billion plus in revenue, all right, which I think is very, very doable. $100 billion plus in revenue. So basically what I see is 5 years from now, I see about 10% of that money reaching down to the bottom line, which would mean the company would have somewhere around $10 billion in net income in about 5 years from now, all right? Net income, we'll say NI, okay? So that's not going to get the company there unless it trades at a 50 PE, which I don't think it would be that realistic for a 60 PE, because we need to get to a $600 billion market cap. I don't think it's going to be trading at a 60 PE because the growth will be starting to slow at that time, in my personal opinion. But they can reach that number easily. Y Model 3 will be out all around the world. Model Y will be in full production by that time, which is their affordable SUV. They're going to have the Roadster out. They're going to have the Semi for sale. There's a possibility that the truck could be for sale somewhere around that time. So, and the truck, I didn't even bake the truck. The pickup truck they'll likely be coming out with. I didn't even bake any of that revenue into the numbers there, because it's like, the way I look at it, that truck probably won't come out in mass production until like maybe 2024, 2023, somewhere around that, in my personal opinion. So I didn't even bake that in for revenue. If I just have the Model Y and Model 3, for production, the Semi and the Roadster, I see them easily being able to do $100+ billion in revenue within 5 years, okay? I think about 10% will reach down bottom line. That puts them at a $10 billion market cap, but that doesn't get them there. So basically in 10 years, what I see is this company having around $200 billion plus in revenue, all right? Plus in revenue. So, and the great thing about this is I think a lot more money is gonna reach to the bottom line on this number, okay? So I think around 15% will start reaching to the bottom line, which will mean somewhere around $30 billion will end up being in net income, okay? $30 billion of net income. The great thing about this is I think the company will trade around a 20 PE, okay? Which I think is gonna be realistic because I think a lot of the growth will be out of the company by that time. So the PE will need to come down in the stock because a lot of growth investors will kind of leave the stock and be like, oh, Tesla's not nearly as much of a growth engine going forward as they were in the past. So a 20 PE will probably be more realistic for the company as they're doing $30 billion in net income. 20 PE, $30 billion in net income, that puts the company at a $600 billion market cap, all right? Which I think is perfectly doable with the type of market share I believe they're gonna be able to get in North America alone. Then when I look at, if they can have a 10% market share or 20% market share in China, in India, and some of the other growing markets in Europe, with Tesla, I see that as being a huge potential for the company. I think they're gonna have around a 50% market share in cars in North America, probably within 5 to 10 years. Never mind that, once they get into the truck game, that will be the next major upside, and that's what's going to push them from $100+ billion in revenue 5 years from now to $200+ billion in 10 years from now. The energy segment is going to continue to grow for the company, so I think it's perfectly doable for 10 years from now. This company is going to do $30+ billion in net income at a 20 PE, which is very fair for the company. It puts it at a $600 billion market cap. That is why I believe Tesla has an opportunity in front of itself to be, a 10 times multi-bagger there. We'll just have to see what happens. I think the great thing about Tesla, they definitely have a visionary CEO. He does execute. He doesn't always meet his quotas on time, but he does execute in the end. The guy said he was going to come out with an affordable Model 3. It's getting there and getting there. It just sometimes it doesn't meet the time requirements most people would like and whatnot. But the bottom line is he does get there in the end. So I think that one has huge potential. Stock number 5 is Callaway Golf, a ticker symbol ELI. So this is a company I own that only has a $2 billion market cap on it, right? Only a $2 billion market cap, and so they need to grow to be about a $20 billion market cap over the next 10 years to hit that number. Their CEO, Chip Brewer, has done a very good job turning this company around. He came in 2012, and they had some rough years there right off the bat, and he kind of started to get this company turned from just being a golf related company to being kind of a company that has several different businesses, which I think is a very good thing. So just in their latest quarterly results, this company had net sales up 38.7% in the quarter, okay? Massive amounts of market share in pretty much every segment you want to be in the golf club and golf ball business. Net sales went from $304 million the previous year to $396. Net income, this might be the most impressive impressive thing, went from 31 million the previous year in the same quarter to 60 million, okay? We're talking about nearly 100% rise there in net income. That is unbelievable, guys. Every metric for this company is going amazing. Look at the first half of 2016. They do 520 million in sales. Now they do $800 million in sales in the first half of 2018, okay? Expanding gross margins, income from operations is up, trailing 12-month adjusted EBITDA is up massively. Look at that. We're talking about a quadruple, somewhere close to a quadruple in just the past 2 years in trailing 12-month adjusted EBITDA, guys. We're talking about a massive turnaround in this business. And it's a business that now owns, a few different brands. So they obviously own the Callaway brand, which is huge in clubs, the most dominant player in clubs and golf balls and things like that. But Travis Matthews is a massive growing clothing brand business, which is very exciting. OGO's, another, golf bag company that's very interesting. And then they have a 15% ownership stake in Topgolf, which might be the most exciting thing about this company overall, despite all their amazing numbers they're putting up. Because Topgolf, in my opinion, 5 to 10 years from now, that 15% Topgolf investment, I think, is going to be worth somewhere around what the entire company is worth right now, okay? We're talking about $2 billion. I think that 15% ownership could be worth around $2 billion within probably about 5 to 10 years, guys, the way Topgolf is expanding around the US and then what they're going to be doing internationally. It's a phenomenal growing brand that's a straight profit engine, okay? So they own Callaway brand, they own Travis Matthews, they own OGO. I think they will continue to acquire brands strategically and continue to bring brands into their whole company and expand those brands as they've done with Travis Matthews now. I think is a very good CEO there. I think he's executing on a vision he has, and I think this is a company that has a chance to be, a 1,000+% gainer over the next 10 years. We'll just have to see. So anyways, let me know what stocks you guys think have the potential to go up 1,000+% over the next 10 years. Even if there wasn't one of those stocks mentioned in this video, I would love to hear from you guys as always. My courses are linked down there in the description. My Instagram's linked down there in the description. Check that out if you want. Thank you for watching. Have a great day.